Welcome to the Ichimoku Kinko Hyo Trading 101 section. We will be covering how to master the clouds and how to understand the Ichimoku Cloud basics. So if you are here now, I appreciate you being on this section. We will be going over the Ichimoku system as individual parts to break each component down. And then at the very end, we will put it all together on how to use the cloud. So welcome, Cloud Life members. Uh, Looking at this, Ichimoku Kinko Hyo is a trading system that is dominantly traded in Japan. It is a very well kept secret because we will be going over different uh, components and different levels of how to use Ichimoku as we go further into this system down the line. But Ichimoku Kinkohyo at literally translates to one glance equilibrium chart. So at one glance, you could be able to tell if you have a trading opportunity or not just by looking at the chart. So we will be going over that later on in this section. But for now, let's start off with the basics and get a understanding of what Ichimoku literally is. All right, so let's move on. So the five lines of Ichimoku Kinko Hyo, you have five components. You have your Tinkinson, you have your Kijun, you have your Chikou Span, and Chikou Span A and Chikou Span B. So starting off with the Tinkinson, all right, our first line, which is the red line, also known as the conversion line. It equals the 9-day high and the 9-day low divided by 2, which will give you that midpoint. Next, we have our Kijun. It's the blue line, also known as the baseline. It equals the highest high of the past 26 days and lowest low of the past 26 days divided by 2, giving you the midpoint. Next, we have our Chikou Span. It's the white line, also known as the lagging line or lagging span. It equals uh, it equals the closing of the current price shifted 26 periods back. And as I said before, it's also known as the lagging span or the confirmation line, which we'll go over later pretty soon. Uh, Looking here, the Chikou Span A is the Tinkinson and the Kijun line to added together, divided by 2, advanced 26 days into the future. And then we have our Chikou Span B. This is the 52-day high plus the 52-day low divided by 2, advanced 26 days into the future. All right. So getting into more detail, more in depth on each line, we will start off with the Tinkinson line, which is our conversion line. The Tinkinson is the fastest responding line to price movement out of the 5 Ichimoku Kinko Hyo lines and is where you want to start your analysis when using Ichimoku. The line represents the process of change within the market, showing the market's initial turning point by crossing the Tinkin line. Tinkin shows short-term price movement and reveals market trends. This makes it easier to analyze the current state of the market and what it's saying. The turning point of the market is the average of the highest price for the past 9 days and the lowest price for the past 9 days. So when this is violated, it shows a possible development of a trend and increase on the short-term momentum of the market. So let's take a look at what it looks like on a chart. So here's your Tinkinson line. It's the red line here that you see. And you see here the past 9 days. When you average the last 9 days, this is the highest point of where price was. And this was the lowest point of where price was. And it relatively stays in the middle of the last 9 days. So this is showing you that the market is pretty much flat here and is moving in equilibrium and it stays pretty much flat. Now, when you have a strong market, the price will like to stay above the Tinkinson line here. And you see that this is a strong bullish market. Same could be said when it's in reverse. When you have a strong bearish market, price is going to be underneath the Tinkinson is going to ride that trend line. So this is showing that this is a very strong trend to the upside, as you see with the price. All right. So moving on to our next line, our Kijun, the baseline. So this is where we have to really pay attention to the market with this baseline. It's a very important component to the Ichimoku system. As we already know, it measures the highest point of the highest high and the lowest low of the past 26 days. So we know this. This moving average line is the average of the closing price, but since the Kijun is also the average of the highest high and lowest low of the past 26 periods, the angle, and this is very important, understand the angle of Kijun will stay flat until the previous high or low of the past 26 periods changes. If Kijun is flat, it means that the market high or low has not changed for the past 26 days, and the market will continue to range or consolidate. If Kijun is angled upwards, this indicates the current exchange rate or price change has changed for the past 26 days, indicating a uptrending market. While a bearish market, if Kijun is angled downward, the current exchange rate or price low has changed for the past 26 days, revealing a clear downtrend. Kijun, when flat, can also be used as a foundation of strong supportive resistance levels as well. Kijun is very important to look at as it shows by overall bias of the market. Once again, if it angles up, it's bullish bias. If it angles down, it's bearish bias. When Kijun is parallel or flat, it is a range, and when the candlestick is above or below, it is judged as a cross-border market that has moved up and down across the equilibrium point of the past 26 periods. This allows Kijun to be seen by traders as a trend line and reference point when looking at the market. The Kijun Sen represents the medium-term market equilibrium. When price is at or near Kijun, this shows the market is in equilibrium. Price being further away from Kijun shows market disequilibrium. What equilibrium means is simply saying that there's are a equal amount of buyers and sellers. But as there is an increase of either buyers or sellers, this would cause the exchange rate or the price to move further away from Kijun. Understanding this concept will help you with your trading decisions. As the price is further away from Kijun, this shows an overextension of the market and a possible correction or potential pullback coming. So looking here at it on a chart, you could see when Kijun's in our blue line here, when you see it going up like this is a uptrend. And you see here price, as price is far away from Kijun, as it getting closer to Kijun, you see that the market start moving up again. And then you see it went flat here and then start moving up again. And you see as it got further and further away from the Kijun, Kijun wanted to act as a magnet for price, bringing price closer back into equilibrium. You see here, it came back into equilibrium and price moved up and moved, it stayed flat here as well. So you have to understand that this line does not only work by itself, as we're going to go into the next section, where the Tinkinson and the Kijun work together. All right. So Tinkinson plus Kijun. So you have a TK cross, which is a Tinkin Kijun cross. This equals your golden cross or a death cross. All right, and we'll be getting into the difference of what those two are. A Tinkin and Kijun, the Tinkin and Kijun are a dynamic duo. All right, remember this. So these two lines like to act as lovers or really close friends. All right, they like to work together. All right. So as they work together, you could get a stronger read on the market. Understanding how these two work in conjunction with one another is imperative to your analysis. Knowing the basics helps further your grasp on what the market may be trying to tell you. When Tinkinson breaks above Kijun, this is known as a bullish TK crossover or a golden cross. representing a potential buy signal. When Tinkinson breaks below the Kijun, this is known as a bearish TK crossover or death cross, representing a potential sell signal. All right. Understanding the difference will help you with your analysis in trading biased. All right. So here you see we have a TK crossover in this area, and here you see we have another crossover in this area, but this is a bearish cross. As you see, the Tinkinson is crossing below the Kijun, and then you see price move sideways, and then it finally drops. And then you have one here, which is a bullish TK crossover, where you have the Tinkinson crossing above the Kijun, and you see price here immediately starts to go up. This is not always the case. This won't always be the case where you get a cross and then it's automatically bullish or bearish. There has to be more confirmation as to whether the market is going to move up at that point or move down at that point. And you see here, these two lines like to be pretty close and tight to one another. Whenever you see they're tight like this and they're angled up together, that's usually a strong confirmation that that trade's going to move in the same direction as they're both pointing. And you see here that when they both remain flat, market likes to go flat, and doesn't necessarily mean it's a strong downward movement or a strong upward movement. Sometimes it may just range sideways to the upside or downside, or maybe just flatten out totally altogether. But you see here, the strength of the market is still bullish. And you see once they got closer together here, they moved together to the upside. So this is one thing to also take note of as well. So moving on to the Chikou spans, the span A and B, which form the Kumo Cloud, all right? Chikou span A and B make up the Kumo Cloud or cloud. The area shaded between the Chikou span A and B, these are the areas also known as support and resistance zones as well. These are the only lines that are shifted 26 periods into the future, all right? You can identify the market trend simply by looking at the position of the Kumo structure and its relationship to the price. If the price of the is above the Kumo, it's bullish bias, and Kumo represents support. If price is below the Kumo, it's bearish bias and represents resistance. To judge the bias of the market better, it requires a candle breakthrough depending on the time frame of the market you choose to trade. It is also wise to pay attention to the thickness of the Kumo. The thinner the Kumo, the easier it may be for the market to violate support or resistance of the Kumo, while a thicker and wider one may represent a strong support or resistance and may be harder to violate. The area where Chikou span A and B intersect one another is called a Kumo twist, and there is likely to be a market turning point, being a trend change or acceleration in that direction. When span A crosses above B, this indicates bullish bias or a bullish TK Kumo or bullish Kumo twist, while if A crosses below span B, indicates a bearish bias in strength, which will be a bearish Kumo twist. So let's take a look at what that looks like on the chart. So see, you have Chikou span A and B. Span A is on top when we are in a bullish market, and span B is on bottom in a bullish market, while in reverse, when we have a bearish market, the span A will be on bottom while span B will be on top. All right. So notice here the angle of these of the cloud and span A and B. So whenever the market is angling up, that is showing bullish momentum when span A and B are both angling up together. When you see span A and B angling down together, that's a bearish market. Now, when you have span A angling up and span B angling to the upside, or span B angling flat, this could be considered a ranging market. So that means you would have to pay attention and watch the market. Even though span A is angling up, it's still saying overall the bias is bullish. But if you see span B is flat while span A is angling up, This could also indicate that the market could be in a short-term range until it's moving upward. So here at this point, you see it was moving upward while this was flat at this point, and then eventually they both angle to the upside, seeing as you see the market here, both moving the market higher to the upside. So this is something to also take note of. You see it went from a bullish cloud, which is our purple cloud, going to blue, which is a bearish Kumo twist. And you see it went from a dark blue Kumo twist to a purple twist, which was a bullish Kumo twist here. So this is another way to identify whether it is a bullish or bearish twist, all right? So here, our Chikou span, also known as the lagging span, the Chikou span is the most important and simplest line of and in the Ichimoku system. So you guys pay attention to the Chikou span. It is very underrated and it's the most overlooked line in the system. So it is calculated the current closing price shifted 26 periods back into the past. So if you measure 26 candles backwards, you can see that it lines up at the same level of the current price value. Things to recognize with Chikou span is understanding where it's located on the chart, for it can give you more insight to market bias. For instance, if the Chikou span is above the price, candles show this above the candles. This shows bullish or buying dominance, while it's below price candles. This shows bearish or selling dominance. It can be used as a signal to enter the market. So, for example, Chikou span is also the confirmation line as it confirms a long, a buy, or short, a sell entry based on whether it is above or below price. For example, if you enter a long position and Chikou span is above price as well, this can be used to confirm the buy. Same thought process for a short. Now, to invalidate an entry, if you enter a long position while Chikou span is below price, this can confirm not to trade this as a bullish market, as it still shows potential seller dominance. All right. Looking at the charts, you can see Chikou span here. So as Chikou span is above price here, this is saying that the market is overall bullish bias. And you see, yes, it is overall bullish bias because you see the market is moving higher in a clear bullish uptrend. So you see here is projected 26 candles back, and it is measuring on that same line here. All right. So this lets you know that the market is very in a overall bullish bias. Now you see down in here that the price was below the Chikou span was below price, saying that this was a short-term bearish bias until we got above here. So this confirmed at this point that the market was bullish bias. All right. So there's just little things that you have to pay attention to understand what the market is telling you at that point. So when we understand this, you could, stay out of bad trades and, see if it's in a good trade. Now, when we get to the live charts, I'll show you examples of where it will be an area where you wouldn't want to trade because there's not one here. But when you see Chikou span entering inside the price or the candles and it's just stuck inside there, that confirms that it is a ranging market or a consolidating market, and you don't want to take trades when it's in a ranging market. At the end of the day, the Ichimoku system is for a trending market, not for a ranging market. Even though you can trade it in a ranging market, there will be different strategies when it comes to trading it in a ranging market. So that being said, we're going to go ahead and, go to the next page. And now we're going to put it all together, all right? Now we're going to take a look at the live charts and apply live application for grooming our day trading abilities using Ichimoku Kinko system, all right? So let's go and move on to the next phase, all right? All right, everybody, we are back here. Now we are looking at a live chart on what it looks like to have Ichimoku on the chart. At first, you'll think it's jibber jabber, it's scribble scrabble, but when you understand how it works as a whole, you understand that it is a, it is a strong tool to use for the market. So currently we're looking at XRP versus the US dollar. And when you take a look at this market, you see that the market is currently under the cloud, which is saying that we are bearish here. So we could actually see that the Kumo is saying that we're bearish. This is where we have our price currently at. All right. So this is telling us that we're in a bearish market. Now, if you look even further, span A on the Chikou Span A is angling down, and Chikou Span B is also angling down, further giving us information that we're in a bearish market. So if you see span A and B both angling down together, that's also clarifying that the market is bearish here. Now, we had a bullish TK crossover, but this is a weak signal, which is underneath price. So there's different types of TK crosses. So this was a golden cross underneath price. If you get a golden cross underneath price, which is a bullish signal, this is a weak signal. If you get a golden cross inside the cloud, that is a medium level signal. And if you get a golden cross above the cloud, that is a strong signal. So that's something else to also take note of and to remember as well. See, you have Chikou Span back here while price is here. This is saying that the market is still bearish bias, and honestly, you would even want to look at this market on the daily time frame, because Chikou Span is inside the candles. When Chikou Span is inside the candles, usually this means we're going to have a ranging or consolidating market, which you see here. Market is moving sideways. It's been inside the candles for quite a while here. So this is saying why the market's been moving sideways from this point as well. Another thing to mention here, you see how the Kijun here and the Chikou Span, the Kijun and Tinkinson were far apart at one point, which is saying that the price wants to get back at the equilibrium, move back up towards the Kijun. Not necessarily mean that it's going to happen all the time, but a lot of the times price does like to move back closer to the Kijun than make its move. All right. So here you have that. What ended up happening after it got back closer to price, it stops at this point, and you see here from this point, market moves sideways even further. So now price got back into equilibrium here from that TK crossover. And after it got back into equilibrium, now the market's going to look to decide whether it wants to go up or down. So if we're looking at this chart by itself, this is saying that we're bearish biased just off one glance. So we know that everything here is bearish biased, but we do know that we have this, and we could definitely bounce back up here. But overall, the bias of this market on this daily chart is showing you that it is a bearish market. So that's one way that you could understand and read the cloud. That's one way that you could start using the clouds for your trading. In another example here, you see that price, everything is bearish here. So let me show you how we could put this together. All right. So we had a bearish TK crossover. That's one confirmation. Price is underneath the Tinkinson and the Kijun here at this point. Chikou Span is underneath price. And if we measure 26 periods, we have a bearish bias on the cloud as well. So this is telling us that the market is likely to go to the downside. And then you see market did go to the downside around this level. That's where the lowest point was until we had this equilibrium. And then the market shot back up to here to get back in somewhat equilibrium, then went down. All right. So this is one way you could combine all these together. There's more that goes into just just the signals and the lines, but as you further progress in this course, you will understand that there's more that goes on here than just the crossovers and the breaks and everything. So we'll go over that. This is just a basic understanding of it. Once you got that basic understanding of each component, then you could start mixing it up together and have better opportunities to trade. That being said, I hope you guys enjoyed this section. See you in the next section, and let's get this understanding of how to use Ichimoku. All right. God bless and have a good one.